Rajesh, good afternoon. Thanks a lot for joining us. Rajesh, you have a very interesting market portfolio strategy, market size, market share, and margins of safety. First, let's understand that, and then we'll discuss some of the sectors and stocks.
Well, Anuj, I think it's a very simple approach, easy to implement, simple to understand. First, market size is nothing but size of opportunity. So when you identify any company, we look at the company which is a sector, which is a huge in terms of this market size. So that if you go right on promoter on business model, then there is exponential returns what you can make out of it. That is the second M, which is the most critical, and that's a market share. Now let me little bit explain this. So we buy the companies which are into the sectors where there are only limited number of players. So if you identify the sectors with a limited number of players and then you buy the leading company within that, now you cannot time probably the economic cycle, you may not be able to time the business cycle, but if you buy the leaders, then their ability to navigate the upturns and downturns of the economy much better compared to any other peer group. Now say for example, you are talking about real estate sector. Now in this sector, it is going through a very painful time in last 6 years. But if you have bought leader, then you have withheld, there was no major damage to your capital. And at the same time, when the industry revives, you make a handsome profit. And last time is nothing but the margin of safety, which is nothing but the valuations, which one can look at from the different parameters, whether it's the price to earning or price to book or ROE or earnings growth. So that's a very simple philosophy what we follow.
Okay, fair enough. Rajesh, good to have you on the show. Today we do want to get your specific take on IT because it's an absolute riot in the market. These companies have started coming out with great numbers for the first quarter and the market can't get enough. What's your view on the sector?
Well, I think this sector will continue to, what I would say, get good demand traction because globally people are moving towards more digital. If you look at even Infosys results or L&T technology results or Mindtree results, digital segment is growing, rapidly compared to the traditional segment. So I think the sector is going to do reasonably well. These are the strong companies. The only, thing what we keep asking to ourselves is that do we have a other better opportunity? Because economy is at the cusp of recovery and we are at the inflection point. So it is possible when you look at over 2 years, probably there are many other sectors and many other companies which will probably outperform in terms of earnings growth compared to say IT companies earnings growth. Because IT companies earnings growth can be 15 to 22%, but there are maybe many other companies in other segment where earnings growth can be significantly superior. So that's a view what we have on IT. We are what I would say neutral compared to other sectors where we are probably more bullish.
Okay, any new theme that you have identified or you have added to your portfolio? If you could name the stocks, nothing like it.
Well, I think the theme from last 12 months, what you have been identified are 3 themes. First, acceleration of formalization. Second, China plus one, and third is nothing but automation and innovation. And each of these themes, which we have identified last 12 months, is further playing out, both in terms of earnings growth as well as the stock price returns. So for example, formalization, and you are talking about any names what we might have added. So building material is one segment which we talked about last time. We have been extremely bullish on this space. We are holding number of companies in this like Polycab, Century Plywood, APL Apollo, and we keep looking into this space. It's a very, very interesting space. It is also proxy for the real estate sector, which also we believe probably the worst time is over. Second is China plus one. We have been very bullish on specialty chemicals from last 2.5 to 3 years. We are further adding to this space. We are also adding to the electronic space. And there are another very, what I would say, bottom-up opportunities which are coming up in China plus one strategy. And last but not least is automation. And this includes the industrial capex plays. Companies like, for example, ABB, which we have added some time back, also 3M, Honeywell, and few very, very unique companies which are going to gain significant momentum because everyone is moving towards automation. So if you look at, for example, very recently, ABB has announced that they have done the automation for one of the largest steel company for the first time in the world. It is for the Indian company they have done it. And it's a very interesting case study. So I think many more such examples are going to come over a period of time, and I think this space is going to revive significantly.
Okay. Rajesh, on your point on specialty chemicals, let me just dig a little deeper. The China plus one strategy, of course, is well documented. Now, what part of it is offering the greatest opportunity? Is it pigments and dyes? Would it be pharma intermediaries? Would it be agrochemicals? What are you most bullish on?
So, Shubhi, this is very interesting question. This specialty chemical is a segment where there are so many components. So while there are umbrellas, like for example, you mentioned about agrochemical. So there are different chemistry. So say for example, fluorine-based chemistry. So where we are holding, SRF and Navin fluorine. So likewise, we have identified the different chemistries. Like for example, ketamine is a different chemistry. And for every component, there are few niche players. So what you need to do in this segment is that, number one, we need to check whether the company has the right environmental pollution norms compliant plants. That is something which is very, very critical. Because there are many companies with hefty margins, but probably the compliance is not equivalent to world standards. And therefore, they may face problems in future. So that's the first important criteria. Second important criteria is that what kind of capital expenditure you have done or what kind of infrastructure you have to expand your capacities. Because world is looking at India. You need to have the right infrastructure in place. Third important thing is how much of your revenue is coming directly selling to the global players, not through your own distribution channel, but directly B2B. For example, one of our portfolio company is supplying to Sumitomo's of the Japan. Now that is it means it is a much more creditable business, correct? And of course, last but not least is, you keep checking the earnings growth. So it is a bottom-up approach because if you look at top-down, you may get confused because there are a number of companies and number of chemistries. Once you identify, yes, it is a China plus one, good traction, then we do bottom-up analysis and based on that, we identify companies in this space.
Okay, by the way, just about preparing for 3 p.m. move, the market's cooled off a bit actually. It looked like that move which was happening towards 16,000 will have to wait for a bit. And the reason for that is the bank nifty has cooled off quite significantly from the highest point. No cooling off in real estate. I spoke about Prestige and Sobha. Look at the bigger ones as well. DLF and Godrej Properties, both these stocks at the high point of their day. Now, real estate is making a big comeback. Rajesh, are you buying any stock here?
Well, we are rightly positioned. In fact, we have been positive on this space from last, I would say, 2 through 3 quarters. And we are playing it through proxy way. So we are buying the consumer franchises, which are going to get very big beneficiary of the improvement in the real estate space. So for example, plywood, wires and cables, pipe segment, and likewise, there are many other companies which we have in our portfolio. Few names I already shared with you, like the largest player in wire and cable, Polycab, we are holding from quite some time. Largest player in plywood, Century Plywood, we are holding from quite some time. Largest player in tubes, steel tubes and pipes, which is APL Apollo, we are very bullish on that name. And of course, Prince Pipe, which we have been holding from almost like post IPO times. So these are the few companies which we have in this building space. Because real estate is a little bit tricky space. There are governance issues and government norms, and it can change the company's fortune. So it is better to play through consumer names which are available at much lesser valuation compared to the normal FMCG companies, and at the same time there are much stronger earnings growth and ROEs.
Rajesh, it's quite amazing, the market's moving on to so many other ideas. They've forgotten the good old-fashioned consumer stories. I know that I think Britannia was still a holding with you. I don't know what else you have on the pure play consumer / FMCG side. What thoughts on some of these names?
Well, Shobhi, what we have done is that 1 year back, we moved within the consumer. So our consumer weightage remains the same, about 18% or so. But within the consumer, we have changed the composition. So from defensives within consumer, we have moved to the discretionary. So it means we have more of Titan, more of Trent, more of Asian Paint, and more of such consumer proxies within building material and such names. So instead of having Unilevers, all are great companies. But from the earnings growth perspective, we believe the traction is going to be much more solid in the discretionary space compared to the non-discretionary space.
Okay, are you applying in the Zomato IPO?
Yeah, we are thinking. We are still working on.
But your view on the stock, Rajesh. How are you valuing it?
I think you have asked the right question. It's all about the valuation. Everything else is good. It's all about whether at what valuation one should buy it. And if you look at the global experience of buying such companies which are at the front foot of such technology, normally the valuations were never cheap. So I think what is important is how they are going to use the 9,000 crores. In fact, we were surprised. Probably it is one of the few IPO in last 3 months where there is no major offer for sale. Otherwise, most other IPOs, promoters are cashing out, or private equity guys are cashing out. Whereas in these IPOs, there is no major offer for sale, which is a good news. It means this company would have 9,000 crore of new war chest to expand the growth across different categories, existing and new. And that definitely, probably, what I would say, way more when we are evaluating and deciding on the company.
Subscription figures, my, it's retail to the races, right? 4 times, 4.3 times, that's the retail oversubscription already. The NII portion is, just 0.3 and the QIB is just a little over 1 times. So it's all fun and games, and we still have 1 more day to go. So let's see what the final subscription figures look like. Okay, so Rajesh, now tell us, since mid caps and small caps, that's really where, the focus and the attention is. Any fresh ideas, any fresh business models that have caught your fancy?
Well, we keep checking on this. The one thesis which we believe is going to do extremely well is capital goods segment, because we expect the capex to revive. And there are a few interesting names we have identified in this space. One of them which we have bought very recently is KSB Pumps. KSB Limited. This again a German multinational, very strong parentage, debt-free balance sheet, 15% to 20% return on net worth, third largest player in its own segment, so which fits our thesis: market size, market share, and margin of safety. So market size is big, market share top 3 in the country, and margin of safety probably trading at around 20 times FY23 forward, with such a strong parentage. And of course, we are expecting earnings growth to be extremely robust from here on, because all 3 segments in which they are present in, they are at the inflection point. So that's the one name which we have added in capex name. Similarly, in auto ancillary, I was talking about a global recovery play last time. There we have identified few companies which we are adding, which we are still in the buying mode. So kindly please put a disclaimer. All these companies what you have mentioned, we are holding for our PMS clients. So yes, we keep checking at new names, but at the same time, we are a little bit more cautious now as the market is running up more and more, and we want to make sure that we don't end up buying any company where there are any questions mark on balance sheet or so that's, I think, something critical from the retail investors perspective. Please do not fall into the trap, because do not buy the junk companies and junk business models. So we make sure that valuation a little bit expensive is fine, but make sure that we buy the best of the businesses.
Okay, take that point. Well, good talking to you as usual. Thanks very much for joining in, Rajesh. You have a good afternoon going forward.